In a world where change is the only constant, Choumil stands at the forefront, guiding title professionals to not just grow their businesses, but to master the art of innovation. With every episode, you're handed the keys to unlock unparalleled growth and stay ahead of the curve. Get ready for a transformative journey.
Hello, everyone, and welcome to the Title Agents Podcast, where we bring you expert insights to help you excel in the title industry. I am your host, Choumil, Alltech National Title CEO. And today, we're going to dive into the world of FIRPTA with Marc Enzi from Tax Solutions, FIRPTA Consultant. Marc is certified financial planner, enrolled agent, and a leading expert in FIRPTA transactions. He'll be sharing his knowledge on how to navigate the complexities of FIRPTA, ensuring compliance, and ultimately making FIRPTA easy for title agents. This is an episode you won't want to miss. Welcome, Marc.
Hey there, Mo. Hey, thanks so much for having me. We're really happy to be here. Good afternoon.
I'm really glad to have you just to shed some light on FIRPTA and really help save us as title agents and navigate the FIRPTA. And let's start off. I would love to have a little background, how you get started and why did you specialize in FIRPTA?
So I've got a background in accounting, finance, and tax. So I've been doing this for over 20 years. And I used to do a lot more things, a lot of international, and worked for Price Waterhouse for a while and learned all about international. Went into private practice and I made the mistake of trying to be all things to all people. And, the harder I worked, the more I discovered that you got to find your niche and be really good at your niche. You want to be the go-to subject matter expert in your field. And so the one thing that I found is really misunderstood is FIRPTA. And we can do a lot of good there, and it's a complex area. And we explain it, we make it understandable, and we oftentimes we're able to save people from having to make those large deposits, but if they do have to make them, we'll help them get the money back. And so we bring in a couple of different areas. And so working IRS controversy, audits, exams, things like that. And FIRPTA was sort of a natural fit. And so that's how we're here. So this is what we're doing now. And that's our major concentration is Foreign Investment Real Property Tax Act.
And you work with your lovely wife, Mary?
I do, yep. Yeah, Mary does a lot of the outreach, and she handles a lot of the tax returns, tax compliance, and she also does a lot of the posting on the Alta forums, answering a lot of questions.
Yes, I truly enjoy her Alta forum postings, and also she did a wonderful lunch and learn for our office about a couple months ago. So we're very appreciative of your help. So let's dive into the podcast. For those who may not be unfamiliar with FIRPTA, can you explain what it is and why it's crucial for title agents to understand it?
Sure. So the Foreign Investment Real Property Tax Act, commonly referred to as FIRPTA.
Can you repeat that one more time slowly?
Yeah.
It's foreign?
Sure. Yeah, the Foreign Investment Real Property Tax Act. So it's an acronym.
It's a loaded acronym.
FIRPTA. Everyone calls it FIRPTA, but what it stands for is Foreign Investment Real Property Tax Act, FIRPTA. And what that simply is it came about because foreign people not from the United States, they would invest money here in the U.S. They'd maybe come here and they'd buy property. Maybe it's a rental. And interestingly, people sometimes get amnesia when they come to the U.S. and they forget all about taxes and they've never heard of tax before. So maybe they'll have a rental property and they'll be collecting rent. They never file a tax return, and then they sell the property. They collect 100% of the proceeds, pocket the money, leave the country, and when it comes time to settle the tax affairs and file a tax return, they say, "Catch me if you can," and they're gone. And nothing the U.S. government can really do about it. Well, if you or I did that, they know where we live, they know where we bank, where we work, where our property is, so they're going to come get us. But foreign people, they couldn't really do that. So to close the loop on this loophole, they said, okay, government's going to have this one-size-fits-all policy that doesn't really fit anyone very well, and it's kind of inconvenient. It says, if you're a foreign seller, you have to leave behind a deposit. 15% of the contract sale price. And then if you want to see your money again, you're going to have to file a tax return to report the property sale. The net of any tax owed, they get a refund. And so that's FIRPTA in a nutshell, simply stated. So what it is if it's a foreign seller, they have to leave behind a 15% deposit. If it helps people think of it in a simpler way, it goes into escrow with the IRS. So not with title, but it actually goes to the IRS. It's on an escrow with them. And if they want to see their money again, they have to file a tax return. So for you or me, it's fairly common. We understand this. We have money withheld.
So it's 15% of the contract sales price, not 15% net profit on the sale.
That is correct. Yep. It's 15% of the contract sale price. They can buy it last week for $600,000. They can sell it this week for $500,000, and they lost $100,000. When they sell, it's going to be 15%. They're going to want $75,000 withheld off the top. So from the gross.
Okay. So this foreign investors, we're very blessed here to be in the U.S., where a lot of affluent people, especially in China, I guess it was the Russians. Now China has the middle class has grown so much, and they're always looking for ways where to kind of to invest money, or it's a safe haven is the U.S. And a lot of times it's a vehicle for a lot of foreigners to obtain visa, assume, to get a residency status. So it's been very attractive it's probably part of the inventory shortage. I know that Canada put a halt on foreign investments because the prices went up so high, and it's all this foreign investors.
Yeah, I've heard about that. Yeah.
I think it was mainly in Toronto, if I'm not mistaken. So
we do have a lot of foreign people. A lot of Chinese, in fact, Mandarin and Cantonese. We had so much that we actually created some videos in Mandarin and Cantonese just to cater to those clients.
Yeah. So what the foreign investors, so let's say we're a title company, we held 15%, we sent to the IRS. What does a foreign person have to do to kind of get that money back, or some of it, or whatever it's actually owed?
Well, the first thing that's going to come up is, and this is what title agents should do, best practices, find out early in the process, do you have a foreign seller? And the definition of who's a foreign seller, that's a little bit of a nebulous thing. It's facts and circumstances based. And oftentimes we'll have people, they'll think that they're foreign, and title will call us, and we'll just ask a couple of simple questions. And turns out, yes, they're foreign, they're not a U.S. citizen, but they have a green card, right? And so as a green card holder, they're treated like a U.S. tax resident, and FIRPTA is not an issue. All they have to do is sign a certificate of non-foreign status, and they're done. No more FIRPTA. And so those calls are easy. We get those calls all the time. We're happy to answer the question. Now, by title asking the question early in the process, to determine, is the seller considered a foreign tax resident or a U.S. tax resident, that'll smooth things out when it comes to FIRPTA compliance. So the easy way to tell for sure that you probably have a foreign seller is if they don't have a tax ID.
Social security number.
Yeah. So if they don't have a social security number or an ITIN, you're probably dealing with a foreign seller. Now, just because they have a tax ID doesn't necessarily mean that they're not foreign. In other words, we have people all the time who have a social security number and a state driver's license and even a U.S. entry visa, and they're still foreign. So F1 student visa holders are a great example of that. They've got F1 student visa holders, they've got a fair amount of money. I'm always surprised at how much money these foreign students have. They'll come here, they'll buy a condo, they'll go to university for 4 years. And, everybody thinks like, well, they've been here in the U.S. for a while. They have a social security number, driver's license, not foreign. Oh, no, they're foreign. They're absolutely foreign. And they are subject to FIRPTA. So you can't necessarily tell with the tax ID. So what the title company can do is early in the process, ask the question, hey, are you a U.S. tax resident? And if the seller doesn't know, they can call us. We can help them sort it out. Title could maybe refer them to, an immigration law firm. They have an immigration attorney. A lot of foreign folks do. They can answer that question. But finding out and asking the question early on in the process is important. And it's so important that it's in just about every real estate sale contract. I've seen a FIRPTA paragraph in there where it deals with FIRPTA and it talks about the withholding. And then interestingly, a lot of the realtor listing agents also have this in their listing agreement. Now, every state and every region's different, and I can't say it's all in the same place, but in every one that I've seen so far, it addresses FIRPTA as well. So FIRPTA shouldn't be a surprise, but it often is. I get a lot of listing agents tell me they've never heard of it before, but it's right there in their listing agreement.
They're just probably newer agents or part-time agents.
Yeah.
And I would think if a person cannot answer that question, if they're U.S. citizen or not, that most likely they're not. They have to.
Yeah, and it's not necessarily U.S. citizenship. It's U.S. tax
I meant U.S. taxpayer. Yeah.
Yeah, and so when I say facts and circumstances based, it really depends on what the issues are. But simply stated, and this isn't a do-it-yourself, and hey, these people are not, because I watched this guy on a podcast. And by the way, be careful of what you hear and see on the internet and TikTok. They maybe give you some pieces, but you don't always have the entire picture.
Right.
But the simple facts are, if a person's been here in the U.S. long enough, they will probably meet one of the prongs of the substantial presence test. So when someone's here in the U.S. greater than half the year, substantially present. Okay, great. That's one element. It's not the only element. There's others. Another one is not here on an exempt visa status, like that F1 student visa. Their days of presence are exempt. Okay, and then they also have to be behaving like a U.S. tax resident. And that's effectively, they have to be behaving like a U.S. tax resident, because if they're not, and I get people sometimes that they're lying under the radar is what they say, and don't have a tax ID. I don't even know how long they've been here in the U.S. They can't prove it, and they're not paying into the U.S. tax system. But then all of a sudden they want the benefits of being a U.S. tax resident, and they really can't have it both ways. So functionally, either they're going to be behaving like a U.S. tax resident, or if they're not, hey, that's fine. Have the 15% withheld, get with the program, get a tax ID, file a tax return, and welcome to the United States, and you get your money back.
So is that simple as that? Getting their money back? What is that? Wouldn't there be some taxes owed? I would imagine what's owed is what a net profit, percentage of profits, or?
Yeah, interestingly, if it's a non-resident, if a foreign person sells U.S. real estate, usually, this is generally the case, not always, but generally, they don't have any other U.S. income. But most foreign sellers of U.S. real estate, it's not like they have 20 rental properties. They've usually got the one property, and they sell that. Well, they're going to get what they paid for the property, the purchase cost basis, plus any improvements. And then you're going to get their closing costs, right? And so what they paid for it, plus improvements, plus closing costs. And then they would have to have another $45K in gain before they would see the first dollar in tax. And if it's a husband-wife team selling 45 and 45, because each one files a separate return as non-residents, they have to have 90K in gain. So what they paid for it, plus improvements, plus closing costs, plus 90K, and then they might see their first dollar in tax if they go above that. So usually there's very little, if any, tax too. So that FIRPTA deposit, it's a huge number. And I really think it's the sort of the carrot and the stick. It's such a big stick to guarantee that the foreign person is going to settle up and file the tax return.
And that's great. I just want to add this and make sure our title agents understand the nuances so we can educate our realtors. Because literally the tricky part is the realtors. They're the ones they're the person in between, and they're the ones who don't understand FIRPTA, and they're trying to challenge you, and then kind of cause more friction and delays and penalties.
Yeah, the worst time to find out about FIRPTA is at the closing table, and here's why. People don't understand what it is. All they hear is tax, IRS, and 15%. That's all they hear. So your seller, all they hear is, nobody told me about this, and it's my realtor's fault for recommending this title company, and this title company is the one who's making me pay 15% tax, and nobody told me. Well, that's from the seller side. Now, from the buyer side, all the buyer hears is IRS is coming after me for 15% plus penalties and interest. And so both parties now are wanting to pull away from the table because they don't know. they don't really know what FIRPTA is. And, it's been misunderstood and misexplained. The reality is FIRPTA is not a tax. It's a deposit. The money is recoverable once they file a tax return to report the property sale. For the buyer, the IRS is not coming after the buyer, as long as the buyer makes sure that the money is withheld at the closing and the money gets sent off to the IRS within 20 days of the closing. Now, functionally, most title companies, and I'm not telling title companies how to do what they do, but how to run their operation, but most title companies will, from a customer service standpoint, will collect the money at the closing, they'll print the check, they'll put it in the envelope, and they'll send it off with tracking to the IRS. There's a few that take it very literally, and they say, look, this is buyer's obligation, so hey, buyer, here you go. Here's the check for the IRS, and you figure it out. I've had some even say, you know what, we're not touching FIRPTA. This is outside of closing. It's got nothing to do with us. And so I don't recommend those last two. I really think title companies in a great position to help the buyer out and the seller out, help with the compliance. Title doesn't take on any risk or responsibility by printing that check and mailing it off on behalf of the buyer. They're specifically carved out in the statute that says the title agents aren't responsible for FIRPTA if all they're doing is printing a check and sending it off. And so title really doesn't have a lot of risk as far as the IRS goes when it comes to FIRPTA. All they have to do is just inform the buyer, hey, we have a foreign seller. Title's covered there. Now, it doesn't mean that title doesn't necessarily have an obligation to buyer and seller as the intermediary in the transaction to, let them know, like, hey, FIRPTA is an issue. But as far as the IRS cares, the IRS isn't really going after the title company. The IRS is going to go after the buyer. That's the one who's really got the risk, the buyer and the realtor for the buyer.
We had cases of penalties and interest where IRS came after us because the checks were coming from us, and this was during COVID, where everything was a mess. From payments were delayed, the IRS was non-functional, and a couple of them took like a year, and the penalties were like in the six figure, and they came after us. It took like a year or two to resolve them, and tens and tens of thousands of dollars of legal fees to fight it.
Oh man, yeah, I'm sorry you had to deal with that. Yeah, that's unfortunate.
No, it's personal to me because we've gone through it. So I'm very passionate about this. I want to make sure other title agents understand what can happen, and just make sure that everybody's safe and doesn't have to go through what we've been through.
And believe it or not, the IRS often gets this wrong. Not only do realtors not know as much about FIRPTA as we'd like them to, or title agents, but a lot of times I'll find IRS people don't understand it and get it wrong. I'd say roughly about 15 to 20% of our transactions have errors, and it's IRS errors, where I'm doing the letter writing campaign and sitting on the phone for hours, fooling around with the IRS to clear up penalties that are the IRS's fault, and then, who do you blame for that? And so we get these, and we're familiar with them. We see them quite often, and we know how to deal with those. It's usually the same issue, where the IRS just doesn't comprehend that the money went in with the documents, the two got separated, and they just issue a penalty.
Yeah, it was exactly that. Like we even have an Irish agent walk into our office. It was literally, it took a lot of education, a lot of, they did not know it was a new agent. And they were literally adamant collecting. We had to, I forgot how much we had to pay, like $3,000. So they can save face. I'm like, we know 100%.
And I'll bet you that revenue officer, it was an RO, I'm sure, didn't even know what FIRPTA was. Probably never heard of it.
Didn't. You're correct.
Yep.
So
yeah, we're familiar. We get these cases fairly often. So this is interesting. Gosh, I wish you would have called us back when this was all going on.
I did not know this about I think we got everything settled probably a year ago.
Okay. Yeah. When it does come up, you or the people in your audience, if they call us, a lot of times we can shut this down fairly quickly because we know exactly what the issues are and who to go to at the IRS and how to get this stuff sorted in a hurry.
Can you share with the audience a case where you helped a title company navigate a complex FIRPTA transaction, turning a potential issue into a success?
Sure. Yeah, we had we had a case where we're in a community property state. So I'm in Texas. So this happened to be a Texas transaction. And I had a lady and her sister had purchased a property here in Texas, and she was married to a gentleman from Japan. Well, he didn't move to the U.S. He stayed in Japan. He was taking care of his elderly parents. So they'd never lived in the United States together in this house. And title company insisted on having the husband on the transaction. Okay, fine. I'm not a real estate attorney, and I'm not going to get between, the real estate laws and the title agents and all that stuff. But I did know that, hey, as far as tax goes, he's not responsible. He doesn't need to have money withheld. But they insisted that he be on the real estate sale contract. And so we found the provision in the law. And, the way around it was we listed the foreign person on the settlement statement. And he was listed on there as a seller with no proceeds. So he had no interest coming to him. Nothing was coming to him. And then we issued a letter to the buyer and seller, simply stated, hey, this is a covered opinion. He's not responsible for FIRPTA withholding. He's exempt because he doesn't have an interest in the property and pursuant to this paragraph. And then that satisfied everyone. So the deal was able to go through, and then they didn't have to have 15% of the contract sale price withheld. And again, it was about $500,000. So that would have been $75,000 that might have had to be withheld. And turns out there was no withholding needed. So everyone seemed to be pretty happy with that outcome.
That's a good amount. What lessons have you learned from dealing with FIRPTA-related IRS audits, and how can title agents apply these lessons to their own practices?
These two go hand in hand. So I don't want to say the top two. I'm going to say the top one, but they go together. Is scan what you're sending the IRS, whatever you put in that envelope, scan a copy of it so we know it went out the door, and send it with tracking. Please send it with tracking. I can't tell you how many cases that we've had a hard time prevailing in because we couldn't prove when it hit the U.S. mail system. And once it's postmarked, it's considered in the hands of the government. And, when you're dealing with these big numbers, if you've got $100,000 in withholding, well, missing things by one day can add another, 5% of the deal. That could be a $5,000 penalty just by missing something by one day. And if the postmark would have saved them $5,000, I mean, I think sending something certified mail is maybe going to cost you less than $5, and it costs them an extra $5,000 because
and it's certified mail, not FedEx, correct?
You can send it. You can do it either way. So it can go via private delivery service, so FedEx, DHL, UPS, or it can go via USPS. I found that U.S. Postal Service is not as reliable as FedEx and UPS, but you wouldn't want to send it FedEx ground because there's certain modes where you can go with these private carriers, but the tracking doesn't count, believe it or not. So you've got to look up and make sure. But if you send it overnight or express, you're good.
How often do FIRPTA regulations change, and what should title agents do to stay updated on the latest requirements?
The last
besides
big
reaching out to you,
yeah, the last big change that we saw with FIRPTA was it's been a few years now where it changed from 10% withholding to 15%. That was the last big one. And since then, I've seen some stuff go on internally at the IRS where the IRS did their own internal audit, and they discovered that the IRS has not really been tracking FIRPTA very well, and they've been losing out on a lot of money. So TIGTA, the Treasury Inspector General's Office for Tax Administration, the TIGTA report came out and said, hey, IRS, you're losing out on a lot of money. So step up the FIRPTA compliance and enforcement, and you'll collect a lot more money. So the IRS is aware that, hey, there's money in them thar hills, and you can expect more FIRPTA compliance examinations from the IRS.
Are there any specific tools or resources you recommend for title agents to help them manage FIRPTA transactions more efficiently?
The best bit of advice I would give is FIRPTA is a complex area of tax law. And so it's beyond the scope of what a title agent and their needs to know what their duties are. I mean, being generally familiar with it, yes, that absolutely helps. But being an expert in it, I mean, it's just beyond the scope. of what a title agent can be expected to reasonably know about. So partner with someone, partner with a firm that really understands the issues, that are reliable, and they've got experience dealing with this day in, day out. My firm, we do this, and we've created our own niche where we've got an answer line. If you've got a FIRPTA question, you call us and we just answer your question. There's no cost for it. The meter's not running. And what that naturally leads to is referrals. Because if it's a simple question, and here's a real popular one, we get this all the time. Hey, I've got a foreign seller. Okay. And what makes you think he's foreign? Well, he's got a green card. Okay, good. Well, since they've got a green card, they're considered a U.S. tax resident. By definition, U.S. tax resident, they're exempt. Have them sign the certificate of non-foreign status, and you're done. And then just move on. Like, really? That's it? And yep, that's all you need to do. Sign the certificate of non-foreign status, and they're done. Yes, do we owe you anything? No. Good luck, and call us next time you have a question. And so we get that question fairly often. And then sometimes it turns into more complicated stuff, like with our seller who's in Japan. And no, they didn't need to have any money withheld, but we did have to get involved. So that we did do some work there. And typically it's the seller who winds up engaging us. Sometimes it's the buyer, because ultimately it's the buyer's responsibility. But usually it's the seller, because if the seller wasn't foreign, we'd be talking. And so it just depends on who wants to pay for the cost of compliance. But initially, to get the questions answered and tell them, what path they have to go down, we're happy to answer those questions. One more thing that we've done is we've created a tool, and it explains what FIRPTA is. So we've got some really good, simple explainer videos on gotfirpta.com. And if they go there, it doesn't cost.
Gotfirpta.com. GOTFIRPTA.com. Okay.
Yep. Gotfirpta.com. No dots or dashes, just gotfirpta.com. When they go in there, it'll explain it in English or Spanish, Mandarin or Cantonese. We got Vietnamese working right now. Once that's done, we'll put that up on the page, and it explains what FIRPTA is and why it's important, so that your title agents don't have to explain it to a buyer and seller, because it's complicated. And if they're not sure and there's any hesitation, then the buyer and seller start to lose confidence. And hey, does this title person really know what they're talking about? And so it's really beyond the scope of what title needs to be explaining. So send them there. The tool is there. It's about a 3-minute video. It explains what is FIRPTA, why it is, and what's important. And then from there, if the buyer or seller have questions, they can give us a call.
So you advise title agents when early in the process, once they know they have a foreign seller, just to direct that agent or the seller to you, or does the title company reach out to you for assistance? Or
it happens any one of several different ways. It can be title company calling us, asking us questions, and then we explain what the issues are and why it's important they need to know. They may just, out of hand, because the title company's been working with us for a while, just send the seller to us directly. Or sometimes title will reach out to another title company where they used to work, or they've got colleagues like, hey, what do I do with this? I've never seen this before. Maybe they called their underwriter, and then we'll get the referral that way. And then they'll give us a call. So we're always happy to talk to people. And we'll always ask, like, hey, how'd you hear about us? And then either title can call us, the seller can call us, the seller's agent can call us, or the buyer calls us. It doesn't really matter. We get all of them. And we just answer the questions. And then what we'll typically do is we'll ask to be put in touch with the agent for the other side. We'll explain what the issues are. We'll ask for an introduction. And then we get the process going from there.
What's the most important piece of advice would you give to title agents who want to excel in handling FIRPTA transactions and avoid dealing with IRS?
Remember that FIRPTA is not a tax. It's a deposit. The seller will see their money again. The buyer, the IRS is not coming after the buyer. Ultimately, the buyer is responsible to make sure it all happens and the money gets sent in, but it's not the buyer's money. A simple way to think of this is like your paycheck, right? Think back to your first part-time job where you're making, say, $10 an hour. If you work 10 hours during the pay period and you're making $10 an hour, your gross paycheck's going to be $100. So you get a $100 paycheck. That's the gross paycheck. But when you cash it, you don't get $100. Something missing. Maybe you get $85. Where'd the other $15 go? Well, the employer, the payor, the person paying the money, is known as a withholding agent. Since they're paying, they have to withhold money and turn it over to the IRS. Okay, fine. The employer is the payor, the withholding agent, much like the buyer is the payor, the person paying the money to the foreign seller. The buyer is the withholding agent, obligated to hold that money back and turn it over to the IRS. But you say, hey, Mark, wait a minute. My employer doesn't pay me. ADP pays me. My paycheck says ADP or paychecks. They've got some third-party intermediary. Okay, fine. But if the money doesn't go in, the IRS isn't going after ADP. They're going after the employer, the payor. If the money doesn't go in, the IRS is not going after title. They're going after the buyer. So, and here's a mistake that I see title companies make. Sometimes title companies will prepare the FIRPTA docs themselves, and they'll put the title company down as the withholding agent because they think that they're the withholding agent because they're the one printing the check. And that's a bit of a misunderstanding. Anyway, point is, the buyer's withholding agent, not the third-party intermediary, the title company. And it's the buyer who's ultimately on the hook for the FIRPTA money. So FIRPTA is not a tax, it's a deposit. As long as the money goes in, the IRS isn't going to bother the buyer. And the seller can see their deposit again once they file a tax return to report the property sale.
Out of curiosity, are there any stats of unclaimed deposits that foreign sellers make?
Oh, I wish I knew. I'd love to have
Probably
that
most
list.
of it, I would imagine, because a lot of people will get lazy and
there's a lot of money sitting out there, yeah, and they only have 3 years to claim the money back, and then the money evaporates. So it's lost to the statute is what the IRS calls it. So they've only got 3 years to claim the money back. So here's one. If you've got FIRPTA transactions where your sellers were just mad because and nobody told me about this tax, and they kind of just said, okay, the IRS isn't going to chase them. Like, hey, yeah, we've got your money. When are you going to file your tax return? They'll keep quiet. They're happy to let that 3 years roll by, and then the IRS just keeps the money. So if you've had a transaction in the last 3 years and the sellers just thought it was a tax and everyone thought it was a tax, it's not. Give us a call. We may be able to get that money back for your sellers and have some real happy people.
That's a great advice. Mark, you have a diverse background, including service in U.S. Marine Corps. And thank you for your service, by the way.
And thank you.
Experience as certified financial planner. How have these experiences shaped your approach to FIRPTA and international tax law and consulting?
Let's see. What's these experiences? Boy, that's a good question. I hadn't really considered that one. Well, I'm used to working with people around the world, and diverse backgrounds. And at the end of the day, people want to see their money again. And I understand that. And so being sympathetic to what the issues are that they're facing and working on getting them their money back from a collaborative standpoint, that seems to work well. As a certified financial planner, I've got a strong background in finance. And again, that lends itself well to FIRPTA. And then my background in tax controversy, working with the IRS. We handle a lot of exam cases and a lot of collection cases. And by being experienced in those areas, we know where the pressure points and the pain points are for the IRS to get them to let go of the money. And we've had some problems where the IRS just doesn't want to let go of that money. And I've got probably half a dozen cases right now where the IRS is being difficult about it. And so we've developed a bit of a reputation with our colleagues and in the community where, if nobody else can get you the money back, try giving Mark a call. And this team seems to have pretty good results. And we do a lot of that. So we do a lot of tax controversy work and outreach, teach a lot of classes on FIRPTA.
Yeah.
And so, I don't know, I've got lots of, in the Marines, I taught classes, I was an instructor, and I still find myself teaching classes today, 30 some odd years
What class
later.
do you teach at the Marines?
I was a navigator, so I taught navigation and then went to work for the airlines for a while, and I taught aircraft systems. And so real complex topics. I suppose one of my gifts is I can take something that's very complex and make it understandable so that, even a lay person can understand it. So
That's a gift.
FIRPTA is really no more difficult than your paycheck, and once you understand that, it's a lot less intimidating.
I can clearly say that finally I understand FIRPTA clearly. You've been
Did that
repeating
help?
the word
Did that make
clearly
sense?
again.
Okay, good.
It's not a tax, it's just a deposit. Okay. I get it. I think it's very simplistic, and you put it very nicely.
Very good.
Well, you work closely
wonderful.
with your wife, your lovely wife, Mary,
Yes, sir.
who assists you with a Spanish-speaking client. And I think, where is she from? Cuba? No, forgot. Mexico, right?
Yeah, she's from Mexico City.
That's
Yep.
right. How
Mary's
has this partnership enriched your practice, and what advice would you give the others working with families and their businesses?
Well, the international language, I suppose, is English, but not everyone can speak English. And I certainly know that a lot of people who are Spanish speakers, their English is way better than my Spanish. So when I get the Spanish speaker calls come in, it's nice to be able to hand it off to a native speaker. And, it lends a lot of credibility, and people are a lot more comfortable speaking with someone who understands the intonation, the dialect, and what's important to them. So Mary can pick up on all that. And she does a great job handling our Spanish-speaking clients.
That's great. We're getting close to the end here. Do you have a favorite quote?
Do I have a favorite quote? Boy, it's one that's going to get me in trouble. I'm trying to think. What's a favorite quote of mine? Nothing's immediately coming to mind. I suppose there's a John Wayne quote. Life's hard. It's harder if you're stupid. In other words, just inform yourself. You don't have to be an island. You don't have to be the one who does everything. You can reach out, and there's a universe of people out there who are happy to help. And so, here's a quote: "Givers gain." So we like to help people. We like to be a resource. And by being a resource to people, we've seen that a lot more comes back to us. So, yeah, I think givers gain is probably the more appropriate one. Forget about that old John Wayne quote.
We'll keep both. I like both. How about books? What's a favorite book of all time, or maybe a favorite book you read recently?
The favorite book, I had a series of books that I read, and I went to university at Boston University and got an MBA there, and spent a lot of time in class and a lot of money, and it was all very good, and not talking any of that down, but what I wish I would have known back before I went to grad school, and I probably would have still gone to grad school. I'm not saying I wouldn't have spent all that money and time and effort, but if you want to have the poor man's graduate degree, if you really want to know what it is that you need to know, where the rubber hits the road, without that piece of paper on the wall, is the books by Action Coach. They just do a phenomenal job of figuring out business and what's important and what stats and biz stats and what do you really need to know. A gentleman named Brad Sugars wrote these books.
And they're books just by Action?
It's called Action Coach, and it's a series of books. Coach. Yeah, by an author named Brad Sugars. And now, don't misunderstand me. I'm not saying go out and spend a bunch of money with Action Coach. Buy their books. I'm not saying to go sign up with them, but that series of books is phenomenal, and it will teach you everything that any Harvard MBA knows, and for literally a fraction of the cost.
Fantastic. Well, thank you so much. Any last word for our audience? I know a couple of things have started early in the process, identify foreign sellers, and the 15% deposit. And what other last words you want to leave us with?
If you have a question, again, you don't have to do this yourself. Just give us a call. We're happy to answer questions. It doesn't cost anything. We want to be your go-to resource. And so the real estate community, and especially title, it's not that big of a community, and we know a fair number of title companies out there, and we're happy to answer questions. And so give us a try, give us a call, and there's no cost for it. We're happy to answer the questions. And if it turns into something, it's usually going to be picked up by the seller, sometimes the buyer, but almost never the title company, as long as we're not cleaning it up after the fact. If it's already closed and it's a problem and there's penalty notices, that might cost something. But usually all that can be avoided with just a simple phone call.
I appreciate it. Well, thank you for joining us on this episode of Title Agents Podcast. I hope you found our conversation with Marc Enzi insightful and valuable. FIRPTA can be a challenging area, but with the right knowledge and tools, title agents can navigate it with confidence. If you enjoyed today's episode, be sure to subscribe, leave a review, and share it with your colleagues. Stay tuned for more expert interviews and practical tips designed to keep you at the top of your game in the title industry. Until next time, keep learning and keep growing.
In a world where change is the only constant, Choumil stands at the forefront, guiding title professionals to not just grow their businesses, but to master the art of innovation. With every episode, you're handed the keys to unlock unparalleled growth and stay ahead of the curve. Get ready for a transformative journey